let me get in the Chief Financial Officer of the company, Sunil Sapre, who's here to take us through and decode the quarter gone by. Sunil, good morning and thank you for joining us. Let me begin by asking you about your services business, because while we have seen a contraction in margins, your services business has remained subdued for the 2 straight quarters, even though the digital has been a big driver for growth. My question really is, how are you seeing things work out between the two, and what can we expect going forward?
Yeah, so far as this total portfolio of the services business is concerned, the traditional business, we have been trying to work with customers to do more of offshoring. We have extended that to some of the digital projects also, which started about, say, 1.5 to 2 years back. The idea being that we are able to utilize the people that we have on site on new projects. As you know, we have had good wins during this quarter and the last quarter on the digital side. So that helps us to improve the strike rate in terms of new wins. And on the margins front, it also helps when you offshore more projects. You do a better, margin management.
Sunil, the industry has also been talking about a talent crunch, something that Persistent has faced too, particularly on-site. Can you tell us about how this has panned out for you and what we can expect going into the next couple of quarters?
Yeah, I mean, it has been challenging time so far as getting the right talent at the right time at the right place is concerned. So on-site, as you know, due to restrictions on visas, the flexibility of staff movement is limited. Also, the fact that we work in project business has certain challenges for us, that the people want to work with us for shorter durations, and sometimes they come in as subcontractors, which adds to the cost pressure. Having said that, the whole approach to move some of the projects offshore is what we are trying to do to balance this portfolio and also ensure that we have adequate staff availability on site. So when from the older projects, people become available on site, we try to see that they are channeled into the new projects. So we have both the sides benefit, that is on the margin side as well as staffing the on-site projects. But having said that, challenges are there, and we are trying to do our best in the circumstances.
And what can you tell us about deal wins this quarter in terms of characteristics?
See, on the overall basis, we have had about 30 new logos being won this quarter. The fact that we have been winning several, new logos, the next, you can say, plan to grow is to how to mine some of these accounts in the way we do business. So while digital is largely project-oriented business, but sometimes when the relationship builds over 2 years, it is possible to do a little more broad-based program with the customer. And that is where we try to move some of the work offshore and grow the account. While it might have some revenue, you can say, compromise to be done because of on-site business moving to offshore. But the fact is that this scaling of the accounts is the next important thing we are working on.
And what role has currency, utilization, as well as pricing played when it comes to expansion and margins for the quarter?
I think we have trended well on these parameters. There has been a significant effort being done, starting with offshoring of projects, the pyramid management. In terms of the pricing, we have been able to get fairly good prices. That is not really a constraint for right skills. Customers are willing to spend and allocate the budget. And in terms of utilization also, we have done slightly better than the last quarter. It was 81.9, and this quarter it has been 82.1%. But this is a high level of utilization, and we have added a few trainees on the India side. So you would find our headcount, the offshore headcount, going up. On the currency side, you mentioned about how much benefit it has. So it is about 50 basis points in the current quarter that has come from the currency.
And finally, Sunil, a question that a lot of analysts have been asking with the expectations of rise in marketing costs, sales and marketing particularly. How can this pan out in the next few quarters? Because there are expectations that they could rise substantially.
Sales and marketing costs has been in the range of about 9%, but as we try to scale some of the relationships, we will invest in consulting-led kind of salespeople, and we expect possibly like 50 basis points in terms of sales and marketing spend to go up.